navigating some significant shifts. Blood products and vaccines. Buckle up, because this is where things get interesting. Alright, let's talk about blood products. Think of it as the lifeblood of this sector, but right now, it's feeling a bit drained. We're seeing a clear downward trend in both revenue and net profit for the second quarter of 2025. The profitability metrics aren't looking great either, with gross margins dipping below 44% and net margins around 23%. What's really striking is the valuation. Remember when these companies were trading at over 90 times earnings back in 2020? That bubble has burst, and we're now looking at PE ratios hovering around 25 times, historically low territory. Why the slump? A cocktail of factors. High inventory levels pushing prices down outside hospitals, demand being squeezed by insurance policies within them, and the looming threat of cheaper imported albumin plus domestic recombinant tech catching up. It's a tough spot. Now, let's switch gears to the vaccine sector. If blood products are bleeding, vaccines are facing a different kind of pressure, one that's hitting their bottom line hard. Quarterly revenue is consistently declining, and get this, the net profit actually turned negative in the last quarter of 2024. Ouch. Profitability margins are under siege, reflecting intense competition and a shrinking demographic base. Fewer newborns mean less demand for certain childhood vaccines. The valuation story here is even more dramatic. We went from sky-high expectations with PE ratios exceeding 200 times in 2020 to a mere 24 times by 2024. There's been a slight uptick in 2025, perhaps due to some companies reporting losses, which can sometimes confuse the market, but the overall picture remains challenging. HPV vaccine sales haven't been the blockbuster they were hoped for, and the competitive landscape is getting fiercer by the day. But here's the twist. Despite these performance headwinds, the vaccine companies aren't sitting idle. They're in a full-blown innovation race. Look at the players. Ouling, CanSino, Kangtai, Jiefei, Wantai, Walvax. They're all accelerating their R&D pipelines. We're talking about next-gen stuff. Ouling potentially being first globally with a Staph aureus vaccine, CanSino pushing its pneumonia series, including advanced pneumococcal vaccines like the 20-valent PCV. And don't forget the mRNA revolution. Wantai already has an Omicron XBB. 1.5 mRNA vaccine authorized. Plus, clever combination vaccines are on the horizon. This massive investment in new products isn't just about future growth, it's a direct response to the challenges they face today. Fewer babies, tougher competition. It's a high-stakes game of innovation. So, what's the big picture takeaway from this whirlwind tour? For the blood products sector, while profitability is under pressure, the steady growth in plasma collection provides a solid foundation, and those historically low valuations might just be hiding opportunities. For vaccines, yes, the current financials look grim, but the sheer scale of R&D spending signals a sector determined to innovate its way out of trouble. The overarching theme, resilience and adaptation, are non-negotiable in biopharma. Keep your eyes peeled, because the next chapter is always brewing.